Welcome to the XFO Intelligence Podcast, where we explore the forces shaping our world through, well, what we call deep augmented thinking. So today, we're tracking a quiet but really powerful revolution in the world of finance. I mean, what if I told you the solid walls between public markets, the stock exchange you see on the news, and the exclusive world of private investment? What if I told you they're beginning to dissolve? And look, this isn't just a minor adjustment. Not at all. According to our deep research here at XFO Intelligence, it's a fundamental reorganization of how money flows through the global economy. And industry leaders, yeah, they're calling it the Emergent Continuum. For decades, the system was just binary, right? You had liquid public stocks and you had illiquid private deals. But that's changing. See, private markets are no longer the alternative or that exotic slice of a portfolio. No, they are becoming foundational. And the reason really is simple. It's economic necessity. To understand why, we have to look at the true function of private markets. They exist to solve specific, really complex problems that public markets, with their relentless demand for daily liquidity and quarterly reports, they just can't address effectively. Think of it in three ways. First, they solve the duration mismatch. An essential infrastructure project, let's say a new power grid with a 20-year timeline, just doesn't fit in a world obsessed with next quarter's earnings. It can't. Private markets, they are built for that kind of patience. Second, they handle complexity arbitrage, right? Financing the incredibly intricate needs of a new AI data center or a massive energy transition that requires bespoke, tailored structures. It's not the one-size-fits-all nature of public stocks and bonds. And third, in today's volatile world, they provide certainty of execution. And this is key. Confident. When markets are shaky, a company needing capital, they increasingly value a guaranteed deal more than the absolute perfect price. And private markets, through direct relationships, deliver that certainty. So this functional shift is creating these massive new frontiers. Let's start with private credit. It's expanding far beyond simple corporate lending and, wow, right into the colossal $26 trillion asset-based finance market. This isn't just about lending against projected profits, it's about financing the hard assets themselves. We're talking server farms, silicon chips for the AI revolution, fleets of medical equipment, even cash flows from music royalties. As our research notes, it's like getting two bites at the apple. You have the credit of the borrower, plus you have the inherent recoverable value of the asset itself. With traditional banks so constrained by regulations, private capital is really the only force large enough to fill this crucial gap. And hey, if you find this analysis valuable, just take a moment to like, share, and subscribe to the XFO Intelligence Podcast channel. It really helps us bring this deep research to a wider audience. Okay, now let's turn to infrastructure. We are standing at the threshold of what industry observers are calling a golden age. You have three unstoppable megaforces converging: digitalization from AI, the global transition to clean energy, and massive demographic shifts. The investment required is just staggering. Our analysis projects a need for $1.5 trillion in data centers by 2030 and a mind-boggling $100 trillion for the full energy transition by 2050. $100 trillion. With governments facing record debt, private capital is the only plausible solution to bridge what's projected to be a $15 trillion global infrastructure funding gap. Even established areas like private equity are transforming. The secondaries market, which was once seen as a last resort exit, has matured. It's now a primary strategic tool for managing portfolios, on track to surpass $200 billion a year in transactions. And for younger, high-growth companies, the game has changed too. After the recent valuation reset, the challenge isn't finding deals, it's finding true quality. We call it the bigger haystack, fewer needles phenomenon. Success now requires blending human judgment with really sophisticated data analytics, tracking everything from web traffic to supply chain signals. This brings us to maybe the most tangible and perhaps most profound implication of this continuum: the transformation of our retirement systems. Seriously, for years, 401ks were locked out of private markets, but now with US regulators reversing that guidance, the door is open. Our XFO intelligence research indicates that adding a strategic allocation of private assets to a standard target date fund, well, it could generate 15% more wealth for a saver over their 40-year career. 15%. That's not just a better return, it's a fundamental redesign of retirement security for millions. We are at a critical inflection point. Financial data is becoming more transparent. Fund structures are creating more liquidity, and regulators, they're finally catching up. The lines are blurring, and a new, more efficient continuum for capital is emerging. So the conclusion from our research is clear. This transformation isn't driven by financial engineering for its own sake. No, it is an adaptive, self-organizing shift as capital just naturally flows towards its highest and best economic use to build our digital future, to power our clean energy transition, and to house our growing populations. The true promise of this emergent continuum isn't just about achieving better returns for investors. It's about building a financial system that is better aligned with long-term value creation for society. And that leaves us with a question to think about. As the financial system rewires itself to fund the complex long-term projects of tomorrow, how will that change the physical world around you, your city, your technology, and your work in the next decade?